When is this bubble gonna pop? Hi everyone, Brittany with Brittany Hannon Real Estate, and today we're going to talk about the housing market. Are we in a bubble? Are we not? What is all this talk about it? What does it even mean? Stay tuned and we'll talk about all of that and more. Before we jump in, don't forget to like and subscribe. Hit that notification bell so you get notified when videos just like this come out. Now let's jump in. You've been hearing all kinds of talk about a housing market crash and a bubble bursting, and what does that even mean? Well, let me give you a spoiler. It's not going to burst because it's not a bubble in the way that you're thinking. There was a housing market bubble in 2007, 2008, and so many of us think back to that time and remember when the housing market crashed significantly. Now, what we're seeing is very different from that time. What happened back then was that there were banks giving out bad loans. They were calling those loans due. People couldn't afford to pay them. And so because of that, everybody was going in foreclosure. And now the banks own all these properties where they have no money in them. So now the banks are failing too. That's not the situation today. And really, people keep talking about the government's giving money and loaning out money, and the Fed is lowering these interest rates and they're just handing out money. They are doing that, but they're doing it to qualified buyers. So people who have the funds are able to get into a house with a low interest rate, potentially a lower down payment, and they're able to have it on a fixed 30-year note. That is the key, because what happened before was that it was an adjustable rate mortgage. And when the interest rates are really low, where do we think they're going to adjust those rates? They're only going to go up. So when we talk about a fixed rate, that really tells you that we're doing really strong in this mortgage industry and in the housing market. The bubble that people talk about right now is because interest rates are very low, and so houses keep climbing. Well, here's the thing, is that we know that with the housing market, it's all about supply and demand. In a normal balanced market, you have 6 months of inventory, which means that if nothing else came on the market, within 6 months, all that inventory would be bought up. Today, we have a 2.6 month inventory. Now that is climbing, but it's a far cry from where we need to be. A few months ago, we were at a 1 month inventory. And that is really when you're talking about this buyer market was out of control. And now we're starting to climb a little bit, getting closer to 3 months, but we're nowhere near that 6 month inventory yet. And that's where we have more of a balanced market. Right now, we're still extremely buyer heavy, which means we have tons of buyers, not as many sellers. So anytime a house comes on the market, it gets snapped up right away because we have all of these buyers who are coming and want to purchase these homes. Now, one thing that people say makes for a little bit of an artificial metric is that we have so many forbearances, and those forbearances will turn into foreclosures. Well, here's the thing about the forbearances. Forbearance is when you extend your mortgage or tack it on at the end or push it out so you don't have to pay it today. Now, many people in forbearance continue to pay their mortgage. They just did it as a precautionary measure. There are going to be some people who aren't able to pay that, and their house potentially would be going into foreclosure. Here's the difference. Because of the housing market and how much it's appreciated in the last few years, they're going to have equity in their home. So most people who are in trouble and do need to sell their house have equity in their house, and they don't have to foreclose. So I hear buyers all the time saying, I'm going to wait for the market to drop. I'm going to wait for foreclosures to come around. And I just keep telling them that's not going to happen. It's not going to happen in the way that you're thinking, because everybody's thinking that it's going to be like 2008, and it's not. We're not seeing that. That's not how it's going to be, because we still have so many buyers who are willing to come and grab up that inventory as it hits the market. So when we see more people coming to sell because their forbearance is up and they don't want to foreclose, we have so many buyers who are going to come and take up those houses. So in that way, there's going to be no bubble popping. And we think about this in terms of the housing market has to go up and down, up and down, up and down. And you're right. Over time, the housing market does go up and down, but you can see that over time, there's a strong trajectory upwards. Even when we had that huge housing market dip, look at this, over the grand scheme of things, it was a little blip in the system and kept going up. And now we're up over and above that. So when you think about it like that, the housing market is not going to be crashing anytime soon. In fact, experts say that we're in for potentially another 5 years of the housing market continuing to increase. So now's the time to get in. If you haven't bought, now's the time to buy. If you haven't sold, now's the time to sell, because like I said, you have so many people who are ready to buy. Now, when we talk about this, we have to think about how the feds are going to be increasing the interest rates. What is that going to mean for us? The Fed are the ones who lowered our interest rate to begin with to stimulate the economy. Now that that's happening, they're starting to increase it. When we see increased interest rates, that means that our economy is stabilizing. So it's good for the overall economy, not so great for the buyers. When you think about a 1% increase, that's generally a 10% decrease in your buying power. So if you could have bought a $500,000 home, now you can buy a $450,000 home with a 1% interest rate increase. So that's a big deal. That makes people want to make a move, which is why you see there are tons of buyers. That is a good time for buyers to make this move. So when we talk about rising interest rates, we definitely have to acknowledge that there is going to be less affordability, potentially less buyers. But remember, there are still so many buyers and so little inventory that the supply and demand rule still stays true. And we're still going to see house prices rising. So even if there is going to be this rise in interest rates, a few less buyers, people who are trying to get in now as opposed to then, we're still going to see these housing prices increase. Maybe not at the level we saw before, because in the last 6 months to a year, we saw housing prices increase by 20% in some areas. That is huge. And we may not see such a steep increase at this point, but we're not going to see a crash. We're not going to see this bubble pop. It's not a bubble. It's not artificially generated. It's not growing to the point that it can't be sustained. People can still afford houses. People can still buy them, and people don't need these crazy adjustable rate mortgages like they did in 2007 to be able to buy these homes. That's when you get these numbers that are unattainable and unsustainable. That's when you have a bubble popping. That's not where we are right now. So that's why I still say that now is a great time to buy, because you want to take advantage of those low interest rates, because we know that interest rates are going to be rising. And it's a great time for sellers to sell, because right now we still have such a low supply that demand is very high. So you're going to get top dollar for your house. You're going to get it sold quick, and you're going to be able to make the move that you want. Now, a lot of sellers tell me this, that if they were to sell their house, where would they move? Well, here's the thing, is that you are able to take advantage of these super low interest rates too, and you're able to take a big chunk of equity and move it into the next place. So that will make it so that you have a much more affordable next home than you would have had if you waited for the market to slow. So this is a unique time where it is amazing for the buyers and amazing for the sellers. So get in, sell your house, buy that house, do what you need to do to get in the game so that you can start appreciating all of this equity. A great way to start building wealth is your primary residence. But you also want to think about starting to invest in this environment too, because you can take advantage of these low interest rates for investors as well. So think about that. If you feel like you don't necessarily want to make a move right now, but you have tons of equity in your home, maybe you take some of that equity and transfer over to an income producing asset. There's a reason why most wealthy people have a lot of real estate. Get in the game and see what they're doing. All right, that's it for today's video. Thanks so much for watching. If you want to hear more about investing, let me know in the comments down below. I would love to talk more about that. And I know that there are people who are interested in that as well. So don't forget to like and subscribe, and we'll see you in the next video.